can't look.
Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Oh, you man, that went way faster than I expected. I'm like getting all ready and looking at everything, and then I turn and it's like it's already ready. I'm like, what? Oh my gosh! Wait, I don't have the music going here, do I? Oh, no, I just can't hear it. All right, there we go. Guys, good morning. Octavius Uzi. Let's come in. Check the markets here a little bit. I'll make sure that our news squawk is going. We do get some Canadian numbers at the bottom of the hour, and we got S&P PMIs today and University of Michigan sentiment. So it is not a no news Friday, but it's not, they're kind of more, let's call them B tier news events. So coming over here, well, wait, sorry, which chart is it? Here we are. 10-year treasury. They weren't really able to hold those levels from yesterday. Fell in the overnight, coming back up. We're about where we were. Honestly, if this is where we end the week, that I think would be a pretty positive week, to be honest with you. S&P 500. Seeing, recovering from the whole Nvidia thing. They're doing okay over there, I'd say. Oil's still just kind of trudging along in this slight uptrend that we're getting. Gold and silver looking really good. Silver not catching up with gold. Interesting, but gold looks pretty great. Copper taking another little bit of a turn down. Japanese yen, okay, so they're okay, but it looks like that the dollar moved up quite a bit here. So that must be coming from the euro. And Bitcoin, well, Bitcoin was finally able to reach up and tag 100,000. Now that's interesting because I heard in my morning kind of, poke around that MSTR was down pre-market. Let's go look. We talked about this earlier in the week, and I must admit I hadn't looked at it too hard just because it's like, well, we know that MSTR is crazy, and this isn't necessarily a very good tactical location to short Bitcoin. But I did not realize that MSTR was trading 4 times net asset value. 4 times net asset value. That's something. Okay, so they are down pretty big. Let's come in, do a 1-minute chart. Okay, so that move was mostly yesterday. They're kind of actually up from the close in the overnight. Yeah, 4 times net asset value really is silly, isn't it? Was there a release yesterday? Let's see here. So one thing was I heard people saying something about Citron. I was kind of thinking this morning, what we really need to do, Seth, is we need to get on that, need to get on the whole the order flow for stocks thing again, the DX feed. But then the issue is I have to keep track of what's going to be the hot stock that day, which I've never really done, and I'm not too sure I'd be good at. Amir, how are you? Good. I'm doing good. Yes, I was just looking. Company raises $3 billion to buy more Bitcoin. Oh, so they diluted people even more. I think the Citron thing was speculation. Okay. Oh, you know what? I didn't even notice here, but Jigsaw did something weird today. It didn't open up all my windows. What's with that? Well, let's load the backup. That's better. And now I'm gonna have to switch everything back over. Let's do that. Oops. Okay, what are we on? Oil. We are on January, so we're on F. And the micros should be in November. Okay. Better. Okay, now that I kind of can see everything, I can see that there does appear to be a little bit of activity going on out here. Amir, how are you? Good. Has the stable version of what? Of Jigsaw? Well, I think that Jigsaw's beta is still in beta and might be for a while. Yeah, I think that's gonna be, yeah, it's gonna be a while before they're done with that. To be honest with you. That's so fucking weird. You guys can't see what I'm doing over here. I'm like trying to resize this window and it just doesn't want to size to a reasonable size. This is like it keeps going a little bit too far. Okay, fine. You're staying like that. Good grief. I can't even. Okay. So now that I got all that squared away, you're probably wondering about, all of that crazy stuff we was doing yesterday, huh? I think I figured it out. I like set everything up so that I could, sit in the other room and work on it. So I think the reason why I was getting a difference between my indicator and the Sim22 indicator is there's this a little oddity that you might not notice. It's kind of a big deal, but you might not notice if you're programming. And that is that when you set an indicator to be on tick replay, the on bar update event fires before the on market data event. So if you're only sticking values into the indicator in the on bar update method, then it kind of doesn't work. Well, it's always one behind. And I think that mine was not doing that, although I think that there was some other errors that I kind of sniffed out while trying to fix that. So I think that the reality is that both of our indicators have a problem. But I think what I'm going to do here, if I can come in, I'm going to add an optimized candlestick, and I will not turn on tick replay. I will not turn on tick replay. And then we come in here and we'll add his delta V4, and we'll add my cumulative delta, and we'll make sure that this one is on each tick. Also, I'm going to tell it to not cache the data. Okay. So now I should get the two indicators, and they should both be like no values because no tick replay. Aha. Okay, so do you see right there? Yeah. Mine is always one tick ahead. So it was that. That confirms it for sure. I had all this crazy stuff. Actually, do I still have it set up? Actually, I don't. I don't think it'll work with that because I had the... Yeah, I get you. Oh, by the way, do we need... Well, maybe I should just move these market depth tapes over to the other window. That way I don't ever have the chance, as much of a chance of it. And this, it's screwing my taskbar up. By the way, I haven't been hearing clicking on my market depth tape. Let's just test something real quick. Yeah, okay. Okay. I think that I got my sizes a little bit too big, but let's change it. That's better. The Xeon book is thin. Well, it's so... Are you saying that, like... You know, these should be like 3,000 and they're only 2,500? Is that what you're talking about? Kind of seems like that when all of the Russia stuff started earlier this week, that those kind of pulled and never came back. So I think it's just a continuation of that. Yeah. Yeah, no, I totally get you. I mean, that was kind of when I stopped, like, really actively trading it, right? So, okay, so I'm glad, and now that I know what the difference between my indicator and their indicator is, I'm pretty confident that the state of my indicator is correct. With the way that it works, I'm kind of sitting here wondering, like, what is the point of having an indicator that updates on each tick? Like, it seems better to, because you can still, like, update things on, well, okay, maybe if I, you know what I think is happening? I know. So if I'm gonna close this. So like, there's the on. I'm gonna write some things down here. See if it goes. So there's the on market data, and there's the on bar update. And then there is the data series. So if I come in here in on bar update and I update the data series, it doesn't update on the charts until on market data has been called, I believe. So even if I'm changing it over here, it's not reflected over here. But what's happening is I have the drop it, right? But what has happened, the reason my indicator is working is because I have overridden this draw because it's candles and I'm doing my own drawing. Yes. That's why you could manually refresh on render. You're right. That's the other way to do it. The way that it's constructed, you know, the funny thing is like when I started having some issues with this, like, so I've had this problem before and I fixed it and then kind of forgot about it. And so it's always been like, why do I have it? I know that I have it constructed this way. So when I copied it over to other on tick replay kind of indicators, I just copied it over and I didn't remember why, you know? And so this time I did a little bit more digging, trying to figure out why is it that way? Because there's like multiple threads on the NinjaTrader forum about this, that if you set something to on tick replay, the on market data gets processed after the on bar update, which makes like 0 sense. It literally makes 0 sense, because basically your chart will always be one market data event behind. If you can only show a change in their chart through changing stuff in on bar update, and on market data happens after on bar update, then you're always never going to see this market update until the next market update. It's like, it makes no sense at all. Market data should be called before on bar update. Why do they have it like that? That makes no sense to me. It's kind of annoying. Well, it is event driven, but I don't understand why that would make it so that this event always triggers before this event. Shouldn't it be there's a thread over there sitting there waiting for data that comes in, and then when data comes in, it says, okay, everything that's attached to this on-market data event, go and call all of those events, and then go and call the on-bar update. Can't you just set it so that the on-bar update happens after all of that? It seems to me, I mean, maybe there's some technical reason with the way that they have it programmed and everything that they have a good one option could be there's some technicality that makes it so that they really have to do it that way. Another option though is they have a bunch of existing stuff that relies on it being that way and they don't want to change it. But it seems to me that the right way to do it would be to call on-market data before on-bar update. Kind of weird. For my inventory cost basis, what's the default on that? On bar close. So I do have it. So that's where I'm like, okay, so if I can get it to work on bar close correctly, then why would I ever want to use it on each tick? I have to investigate that further. X asks, is it true that scalping on a live account with a type 1 to 2 tick stop loss and take profit is not going to work on bonds because of slippage, but on demo is easier because the trader gets filled faster? Yes. I mean, it depends on your demo, right? If you're using the Jigsaw simulator, then no. The Jigsaw simulator is actually a little bit more stingy than what you would get live. By about like a quarter. But like the rhythmic CQG simulators, well, really what it comes down to is the rhythmic simulator, because that's what pretty much all of the trader combines out there use. Yeah, it's you get filled faster than you would in real life. Actually, the thing that's weird about the rhythmic simulator is that the rhythmic simulator seems to lose track of your position in the queue. So I think that people were doing this with one tickers, and that's why they were like, we're gonna stop this. Like we're gonna stop people from trading bonds because we see too many people doing this. But I think you can do it in equities as well, and it doesn't have to be like a one ticker. You just have to put a limit order and have it move away from the limit order and then come back. So like if you move more than a certain number of ticks away, it's like their simulator stops bothering trying to keep track of what your position in the queue was. And so when it comes back, you're basically at the front of the queue, right? So if you're just alligatoring everywhere here in ES, you always submit orders at every price. Like let's just say, okay, so you could write an algorithm that does this, that says, don't do it on the inside 2 or 3, but then at every other price, put a limit order. And then as we tick up or down, cancel them. Unless I say, I actually want to keep that one. I specifically say I want to keep that one, right? And then what will happen is if you use those limit orders, you do it right, they'll always get like almost instant filled. And you could potentially duplicate it in ES. You could potentially duplicate it in ES. It would be like super tedious and difficult. not worth it, but you could possibly be getting. I think that's why people get in on that. Now, with that said, I wouldn't say that like trying to take one tick scalp in Zien is impossible to work. I think that there are some setups that with the right tools and algorithms, you might be able to grab that one tick pretty reliably, but there will still be slippage. So there's definitely going to be some situations where you only want to take a one tick loss and you actually end up taking a two tick loss. That will happen, and so you're going to have to account for that. Like your win rate is going to have to be higher than typical to make up for that slippage. On the split side, I caught 10 point slippage in ES before. That's like a 40 tick slip. I don't know how I'd find it. Well, actually, I think that I do have a way, because I have gone back and found it once before, but somewhere in the live streams, I take a 40 tick slip in ES, which would basically, if you were trading a combine, it would basically end your combine right there. Well, at the beginning, I would say that there was a little bit of activity that was making me like, but now that's kind of slowed down, and this area in the treasuries looks awfully congested. Looks awfully congested. How am I doing that? Just a thought, with your knowledge, background in both programming and financial markets, what if you developed a charting website like TradingView with a cheaper subscription? Oh, dude. Well, so first of all, I feel kind of flattered. Thank you so much. But I don't think that making a charting platform to compete with TradingView really makes sense. So, like, we come to TradingView. TradingView specifically, I don't think really makes sense. So if I come in here to upgrade, oh wow, it used to be it was only like $9. So I'll tell you, they haven't put it out yet, and I don't know what it will be because I'm not privy to those things. There are some good. So I think I can tell you, but I'm just not going to bother telling you because it's not supposed to be until next week anyways. But there's some pretty good discounts on Jigsaw coming next week. Depending on... So, like, normally you use my discount code, you get, like, $30. I think that you'll be able to get it $50 off. And then some products you'll be able to, not like the main thing, but like some things with like the trade subscription and some of the course ones, $100 off. So that's coming next week. But I don't know anything about trading views, but I remember TradingView being like $5 to $9. So kind of the issue is that data costs a certain amount, right? So if I'm if I'm coming in and I'm providing a charting platform and it's only $5 a month, how would I work that? Because no way that, like, yeah, plus I don't think that most basic one, oh, they have tick-based intervals now. Well, that's interesting. Ability to buy professional data. Oh, okay. The professional data is a separate add-on, so maybe you can just do the $12.95 one. But I'm just not sure that there's enough margin involved there. So I saw this really interesting video yesterday on TikTok. Who was it? Was it Alex Hermosi? I don't know who it was. Or maybe it was Gary V. TikTok started showing me Gary V again, which is like, because I can't stand Gary V. He's all sales. And he was some real nonsense, like the NFT thing, right? But they were saying that, like, Elon Musk told them this, that if I'm going to go into a market, if I'm going to go into a new market, how do I know that it's worth me going into an existing market and trying to compete with this existing market? And their take was that unless your solution is orders of magnitude better than existing solutions, it's not worth it. So that means it needs to be 10 times better than existing platforms to make it worth it. Okay, well, I think I can make a platform that's 10 times better than existing platforms. I think I can. I think that if you add the combination of order flow indicators, you add order flow indicators on stocks, you have full caching and data saving with it, you have full back testing with it, and you allow it to be done with Python. I think that those things combined together would make a platform that is 10 times better than other competing platforms. Technically, that platform, I suppose, would be competing with platforms like Thinkorswim, for instance, right? But just the inclusion of order flow stuff into it, I think would make it 10 times better than existing stock trading platforms, you know? So, like, I think that I could make a platform. I don't think that I would be trading, I would be competing with TradingView, and I don't think that I would make it a web platform. But I would still have it be a desktop thing, because it's for trading, and I think that a desktop application is sort of appropriate for trading. But I do think that I could compete. I do think that that's that level of an improvement over it. Now, a big part of what I just told you there was order flow on stocks, right? So there is a way to do that, and that's my indicators. So my indicators are 10 times better than I think other options out there. And like one of the biggest advantages where you get them, one of the places where I think you can have the biggest advantage at least, is with doing it on stocks. And so I've been wondering this morning, hey, Seth, you know what you need to do is you need to just pay for the NASDAQ total view with DX feed. And you need to, I mean, I did that for a month and we didn't really pay too much attention to it and all of these things. But like now I'm thinking about it and I'm like, okay, but if we were coming in every day looking for the biggest stocks to watch, putting the names of them in the title and really pushing watching the individual stocks, I think that would probably make a big difference. So now I'm like, how do I justify this? I don't know. Is that something that interests you guys? Is running the order flow indicators on stocks again? Because honestly, it's only like $100, $150. So we only need to sell one copy of the indicators a month. That's not too hard. That's not too hard. Run it on TLT. Yeah. That's interesting that you're most interested in running it on TLT, but that's because that's the thing that you're trading, huh? do believe we have sold a number of... Okay, so we sold 3 in October. Oh, not in November. Only 1 in November. Only 1 in November. So I got 2 things going on, right? One is the video editor. So we should have another video coming out on Monday. So I have to make enough through the stream to pay him. And then we'd also have to make an extra 100 on top of that. So that means that if we were to say we want to pay for we were going to pay for all of that in November, we need to sell 3 more copies of our indicator package, right? So I think, you know, our what do we call these things? Hold on a second. Values. Okay, I think that our core values here are integrity, excellence, and teamwork. And this is an opportunity for the teamwork part, right? So remind me to talk about it. Remind me to talk about the indicators and I guess the Jigsaw affiliate links, because those count too. Actually, I'll come in and look at that. I think that there's been one this month. I think I have done that this month. Oops. Wrong button. Oh. So I had some in October, but not too much here. In November. Well, maybe that's because everybody's waiting for Black Friday, right? Okay. One of the things that I find difficult is that I'm not complaining. I don't want this to come out as a complaint. It's just like something that I have to factor in, is that I don't know exactly when affiliate revenue is going to come. And like sometimes it's like several months delayed. Like with Jigsaw in particular, that, you know, there's a chance that you're just buying it to try it, and then you decide that it's not for you and you get the refund, because there's no demo. You just have to buy it and get the refund, basically. And that does happen. So like they kind of have to delay things for a couple of months to account for those sorts of things. So like if I sold a bunch in October, you know, I don't know when that money comes through. I don't know when that is. But it doesn't look like there's been any in November, interestingly enough. So, 3 of my indicators would put us there. So you guys remind me. We'll talk about it in chat. Let's go through it right now. And if we can get 3 of them, then we can afford to both have a video editor and buy DX feed and run this stuff on stocks. And that's the incentive for you. So this is why it's teamwork, right? You got to help me. You know, I guess I'm kind of Libra. You guys are gonna have to help me. We work together to get 3 of these sold, so that we can have the DX feed, and then you guys here watching the stream we'll be able to see this data on individual stocks. And Octavia says run it on TLT. Okay, sure. I don't think that that's like the most popular one, but we'll run it on TLT because we can pull it up on as many stocks as we want to at that point, right? So I think that if we were running it today, we could probably have it on TLT and MSTR. MSTR would probably be one of the big ones that we'd be looking at. There's also, let's see here, NASDAQ most active markets. So I could come in here and I could say most active by dollar volume, MSTR, Microsoft, Nvidia, Tesla, Alphabet, right? So probably we could do, let's just say 3 of them. Like, yeah, we could do the Magnificent 7, but that would be a lot of, I think that there's probably a limit. So we would want to be running the advanced cumulative delta on it, and we could try the inventory cost basis. And we could have the DOMs on them. But the advanced cumulative delta is actually one of the most processing intensive indicators I've made. Because what it does is it tries to match up the market events, the market orders, with changes in level 2 to find its companion to determine whether it was a buy or a sell. And it has like a list, and it goes through and tries to match them on the list. So that's pretty intense, right? It's doing that for all of the orders. So I don't know if we could run it on too many at the same. So I don't know if I want to do 7, but let's say the top 3. Yeah, the top 3 for that day. And let's just say that right now we would want to be. It's interesting to me that Microsoft is higher active dollar volume today. Is there something with that? Trading View. I wish that there was a way to get this through. You could like web scrape it, but let's come back to this. And oh, I already had one open over here. Microsoft, because they having some sort of a big move recently or something. Well, they did yesterday because there was earnings. I'm just surprised that it's higher than Tesla is all. So I think we would do MSTR and Nvidia. I think that more people would be interested in MSTR and Nvidia, right? Okay, so that's the first thing is cumulative delta. So you're going to remember that there's a lot of randomness built into price. Market makers, they just want to make money from the spread, and everybody thinks that they're pulling all of this crazy, like, to stop people off and all of these sorts of games. The reality is that they don't have to play those games. Y'all just stop yourselves out on your own. All they have to do is just make sure that there's a certain amount of volatility around what they think is the optimal price. Okay, so that randomness kind of makes price a little bit unreliable. But the market orders, on the other hand, the market orders are different because those are people that are actually taking or taking off positions, right? And so when you go and you look at the market orders, there's a lot more reliable. And so whether they are overall net buying or overall net selling can be an extremely effective indication. So if they are overall, the market orders are more buys than sells, then the chances are that it will continue to be like that all day. And those effects are pretty strong in like the treasuries, but when it's from my experience, my short experience with it, those effects are even stronger in the stocks. Yeah, except for when they're overall net buying and prices still going down. So that can happen. So that would be, well, so here's the thing. If that's happening, why is that happening? So when we come over and we look at cumulative delta versus price in the S&P 500 futures, you can get divergences, and like those divergences usually come back out, but you don't know if it's the index, if it's the price that's going to come back in line, or if it's the cumulative delta that's going to come back in line. And when they're not in line with each other, it's kind of like we don't trade it, right? And why does that happen? Well, because there's like hedging and things like that, right? There can be reasons when the overall markets, the actual stocks themselves are buying or selling, and the people in the futures have to be doing something different. And I'm not exactly, completely in the know about what all of those situations are, but they exist. Okay. But now think about it with a stock. Like why would it be happening like that in a stock? Well, one of the things is that stocks are all very highly correlated to the index, right? So if we're seeing buying, like overall net buying and cumulative delta in an individual stock, but price is going down, and then I'm going to go and look at the indexes, and I'm going to see that, the indexes are down too, then that explains it, right? And so then, kind of depends on what I think the index is going to do. If I think that the index is going to turn around and turn into buying, then I would probably expect that on my instrument where I was already seeing buying, that instrument will probably buy even harder when the rest of the index comes up, right? Because I would prefer to be in a trade where everything's in line. On the split side, what if the indexes is going up and maybe even the stock is going up, but I'm seeing net selling in it? Like if I was in MSTR, 2 days ago, and I was seeing net selling, right? That's to me is like, some really big guys are coming in and selling it, and retail is just overcoming them. But that could be a real harbinger of, something that's to come, right? So there can be some real value in it. Things that you'll be able to see with it on individual stocks that you just can't see with other things. Well, and it happens because the liquidity. Well, so the liquidity providers inject a certain amount of randomness to it. Liquidity providers are not going to make a stock trend all day, right? I think, like in the treasuries here, I think that this is my theory, because it's going to be, they're all going to do it differently, but just based on what I see, my guess is that a liquidity provider in ZN basically says, okay, my optimal price is 21, but then they're going to allow it to move 2 to 4 ticks around that. That's enough to stop most people out. All the net buying in the world isn't going to stop them from making all of the bids just vanish? Well, if there's net buying in cumulative delta, even if those bids are pulling, it's going to be hard for those market makers to hold that. Road says spread as an indicator. Where are you talking about? But one of the indicators that you do want to look at is cumulative delta versus price, and you want them to be correlated. If they're not correlated, you need to know why. And if you don't know why, don't trade it, right? But these are situations, like, they happen in treasuries, Honestly, the place where like cumulative delta and price in treasuries don't line up, it like almost never happens. Happens all the time in ES, but almost never happens in CN. The problem with ES is there's too many things that can cause that phenomenon for us to really know what's going on. But in stocks, what I'm saying is in stocks, there's it's more focused, and you can actually maybe determine that. Especially if you, on top of that, you're looking at the options. Which, by the way, we should look at some options here on MSTR. But anyways, that's the indicator that I have that would be the most useful on the stocks is that cumulative delta. That's and that's worth $100 on its own. It's very complicated. It was actually really, really hard to make. Okay. So if you're interested in doing that, you would want to buy DX feed, and then you'd want to buy my indicators, $100. And DX feed total view, it's like $100 a month. I think it's actually normally a little bit more than that, but like 120 or something like that. I might need to catch I don't like that it's asking me it's texting me a number. So let's see here. Okay, that's better. Let's come to options. Option chain. Enter symbol MSTR. Well, I feel like that December 20 is like way too far away, but let's say that MSTR should be $100. Oh, wow. They have stuff all the way down at that strike? Okay, so that's correct. There is some open interest down in there. The most is at 191 though. At least with those like outliers. 125. In fact, it's actually a way more than... Okay, and what would it last? Puts So if I were to get like well, where was it? Oh, you know what? I was looking at open interest on calls, not on puts. Wow. Okay, so there's actually a lot at some of these ones like way down here. 10 cents. Really? For a December expiration? It goes up very quickly though. So I was gonna look at $100. What are they asking now? 123. Okay. That's a lot of money involved in there, though. Another thing I need to check is if they do the NASDAQ total view, if I get the things like the tick and stuff, because there's a couple of little tricks that we had there that I think people would like as well. Oh yeah, I'll change that. I won't mess with that until after stream. So I had, like my cumulative delta. I think that I've got everything in there. I think that I want to make a couple of changes to it though, because there's some of these things where it's like, especially when I'm going through a historical, it definitely takes longer for it to load because it's trying to export the results after every bar. And it also, it will try to export it even if it's already in a file. So I've got to fix out those sorts of things. Some things under the covers that you guys probably would never notice. Oh, but that's actually something else we should probably. I don't know why. I would have thought that everything would have opened up normally this morning, but it didn't. That's right here. Okay, so what have we added here? You can now use the caching on a backtesting. So that means if you want to backtest order flow, you can do it now. Saves the data to a file, and then you load those files up when you're doing the backtest. Okay, I have added the caching to the inventory cost basis part. So that seems to be working okay now. I also added an inventory cost basis companion. So that's this thing over here. I had a little bit of an issue with it, but I think I've fixed it. So now, there's these data series underneath, like how much inventory is on, how much profits they have, the things that we use to calculate these lines, the sub-series, and you couldn't see them, and now you can. So by default, it only shows you inventory, but you can get all of them. And basically what it's doing, because you don't want to, this is a complicated computation. You don't want to do that twice. And that was the thing, is before, if you wanted to show both of them, you had to put it on twice. So what this is doing instead is this is finding the other indicator and looking at it. So finding the other indicator and looking at the values and then copying them down here. So they were pretty clever. I thought, though I had to do some clever things to get it to work, because like my initial first two ways of doing it didn't work. But yeah, that's what pretty clever. And I think I want to add one that will just do this for any indicator. Because you might have run into this situation where you have an indicator that has multiple plots and you don't want them all plotted in the same window. But how do you do that other than adding it twice and hiding some of the series, right? Well, this allows you to do that. And we might even be able to add on to it the caching. Now, I don't know if the caching part would really make sense, because it is like always one bar behind. Because there's this issue where it's like you don't know which indicator is going to calculate first. So we got that. Okay, then the thing that I was working on a little bit earlier, this cached version of cumulative delta, where we were checking it, and it was that the other indicator I was looking at has a slight little bug. It's just basically the number that it's showing you is always one market data event behind. So I could totally see people not seeing it. By the way, I have to say that guy that makes that one Sam22, I don't know where to find. I mean, he's on the NinjaTrader forums. I don't know. I feel like he does good work. Like, it doesn't seem like he's a programmer by trade to me. It seems like somebody that kind of learned from doing NinjaTrader stuff, but he's done some interesting, clever things, and I would like to work. You know, like, I would love to have him in chat right now and me explain the problem so we could fix it. But anyways, yeah, we're getting a little bit more selling there in the treasuries now. It wasn't too much, but they did come in there. Okay, also its cumulative delta uses candles. Okay, another one is there's this resting orders filtered. Oh, okay, so I need to add this on here. I should add this on here for you guys. Resting orders filtered. Where is it? So for resting orders, I'm not doing any. Okay, so we'll do it with this one. I'm gonna move this up. Okay. I'm gonna move it so that it's well, I'm gonna have to wait until there's like an actual bar. Okay. But you'll see the difference. I think the resting orders filtered is the one that we actually want to use. But you want to keep both of them. Okay. Data pipe. So if you want to do back testing on Python or something like that, I have an indicator that spits out literally every data event that comes through. Oh, by the way, is that on? It is on this chart. Okay. We're good. So, and I think in the future, I might even have some, might even make some of these things to process it outside of NinjaTrader available to you guys. But that's way far in the future. A couple of other little things like the cached files include the file names at the bottom. Those are all of the things that I have changed right now that aren't in the latest release, that are to be released. Still in beta. Still in user acceptance testing, let's call it. Okay, let's see here. Does it give us a bar? It didn't. Is it not working? Is there a problem with it? There is a problem with it. Okay. What if I just refresh real quick? No, it doesn't. Still doesn't. Hold on. That bothers me because I really want to show that to you guys. Try and figure out what's going on there. It's funny when you add something to the chart and like it immediately, it doesn't work. Oh, that's interesting. It looks like they both actually have this bug, but I don't know why the other one must not be doing it because it's cached. And see if that fixes it. Nope, it still doesn't like it. No, it's not that. That should still be there, but it's not apps. All right, time to pull out Visual Studio. It's just the easiest way to find out. Five. Break. Which line is it? What? Really? How is that? Oh, I see what's going on.
Connection lost.
I see what's going on. Oh, that's so dumb, Seth. Seth. How did you miss that one? Yep, I did. Okay. I didn't initialize the I guess maybe I hadn't tested that one yet. I thought I had tested it, but I guess not. Because I was never initializing the session iterator. Okay. Let's try that again. Clear. Better. At least it didn't crash. Now we got to get NinjaTrader to reconnect here. No? Oh, there we go. There we go. Still loading up here a little bit. S&P 500 in the first 15 minutes is looking pretty bullish, doesn't it? I probably should have been looking there to put a trade on, but no, I hope it didn't crash it. There we go. There we go. Okay, except for that, I'm still not seeing. Okay, you know what? I'm gonna get rid of these things. Some print statements I put in here. Comment those out. Okay, it is showing something. So far, it's not on the latest bar. What's with that? All right, so there's still some work needs to be done on that one. Do I have it on my list here? Doesn't look like I do. Fix that. Okay, so that was the PMI. They usually don't move quite that extreme with S&P PMIs, but let's see here. Services PMI 57 versus 55, and manufacturing 48.8 versus 48.9. So the composite ends up being 55.3 versus an expected 54.3. Well, that's weird. Why does the composite end up being higher than expected? Oh, services was higher than expected. I got it. Okay, so a little bit higher than expected, so that should be a sell, huh? Yeah. Oh. That's it right there. Better. Okay. We'll let that run for a little bit. Okay, so now I got this thing that's kind of been eating at me. So going back to the comment from Uzi. Let's close Visual Studio here real quick. Okay. So Uzi was saying, except for when their overall net buying and prices are still going down, and it happens because liquidity providers control the price. All the net buying in the world isn't going to stop them from making 90% of the bids just vanish. So I gotta come back to that one. I feel like I need to push back against that a little bit more forcefully, because that's not accurate. If we're coming in here and they're not holding, they want price to come down, so they're not holding bids and they're holding offers against a big order flow going along, that liquidity provider could get completely screwed by that. So you got to remember that the liquidity demands is orders of magnitude higher than the actual liquidity available. So these guys out there, if there's a large meta order out there and they need to buy, and they're buying against the liquidity provider that wants to hold that price there and is willing to get all of those offers filled, the almost always going to be the case that those market orders can exhaust what the liquidity provider has available. So, and that's how a liquidity provider gets screwed, right? Is you're providing liquidity, you're taking on short inventory, and it just keeps going against you. And that's when a liquidity provider would blow up, right? So they do not do it that way. They don't really want to do it that way. They want to have a certain amount of randomness in the market, and they will hold one side of the market less aggressively than the other side of the market, for instance. But what that basically ends up in doing is, when the market is overall neutral, there's not a really large meta order coming in there and everything, then the price will kind of come in. So the liquidity provider can really only control the price when there's not actually a large force in the market, right? So it's basically, there's either a large meta order being executed or the liquidity provider is in charge. Now, when the liquidity provider is in charge, retail trader typically can't beat them unless you have like a huge stop, okay? Because basically you have to have a stop that's a lot larger than the amount of randomness that they're injecting into the market, essentially, right? And then on top of that, you have to be sure that you're not going against a super big meta order when it comes. So the last thing you want is, okay, I go short because this is the top end of the range, and then it breaks out because there actually is a buyer there, right? That's what screws you over. So it's, you gotta be careful getting involved when it's the market makers in control. But the market maker cannot control the market against a really large institutional buyer. Large institutional buyer will, if they're buying, it will move up. And anybody that gets in the way is just going to take fills and is going to get slaughtered. Okay. Now, I don't know if that's the sort of situation that Uzi was thinking about. You just be careful when you're trading the S&P 500. Okay, the S&P futures. there can be all sorts of reasons why they might be buying when the index is actually selling. Okay. It's really complicated with all of the options and the hedging and all of this sort of a thing. Reading the order flow in ES is hard. Is hard. So I guess what I should say. Okay. I think it might take more orders to see the difference I want to see here. Is it in what is what? Max difference and min difference. Well, okay, min difference is the one that I think I care about, so just need to be patient, I guess. Oh, there's a new comment on your channel. Let's check. Well, they did move pretty strongly off of that PMI, but it looks like they were able to at least close the gap. What time is it? Oh, so we got an hour left. My wife has left. I've watched the kids again today. You know what, though, I have to do? I think I need to go and mow the lawn. Well, not mow the lawn, but mow the leaves off of the lawn, right? Because my understanding is there is a pretty decent storm coming here. And the last thing, I hate it when it snows before you take care of the leaves and then the lawn is just messed up, right? So Gary has a new video. Why the Norton method is still valid today? You know, I think that the Norton method is still valid today. It's still like the hardest way to trade. That's kind of the issue. It's like, I really wish that I could like full-throatedly like, oh, everybody should buy this course and look at it, right? The reality is that it's not for everyone, right? That's kind of the thing. Like I can come over here, like my indicators, like especially for stocks. I feel that every person that is trying to day trade stocks would benefit from my advanced cumulative delta indicator, for instance. You know, I think I can say that across the board. It's a really useful piece of information that is relatively simple to add and can really help in your trading. You know, there are some other things that, you know, like DOM reading and stuff. I think that DOM reading is really valuable, but it's a lot of work. It's a lot of things to do. And if, you know, like with the Norton method, if that's going to be like your whole strategy, that's tough. That's not for everyone. Still like his course, especially that first one. Some stuff in there that was like, you know, we really shouldn't be allowed to trade futures without having gone through this. Kind of starting to turn into a quiet day, guys. I shouldn't have gone too deep into the code there for a second, because I come back out and it's like y'all left. Nah, you're still here. Actually, you guys are all still here. You're just not talking. That must mean that you must have all taken trades. Did you guys all get short off of that PMI news? Okay, so here comes consumer sentiment, right? Might be more interested in doing something after consumer sentiment. Let's see how this one goes. Okay, so 5-year inflation, we got 3.2 versus expected 3.1, but then on 1-year inflation, we get 2.6 versus 2.7. So it's a little bit mixed there on the inflation expectations, but then the sentiment final is lower than expected at 71.8 versus 73.9. So that's not like a huge miss, but it is a little bit of a miss. I can see the S&P 500 selling just a tad off of that, and it looks like the Treasury's probably going to come back to that 21-ish area. I don't know if they can hold above 21 or not. How do I learn this? You'll have to be more specific. You'll have to be more specific, body snatchers. Probably the answer to your question is just come here every day and watch and listen. And ask questions. You're looking to sell VWAP? Yeah, you know, that's... It matches up with our level. So cost basis short is at 21 as well. But I don't know. That's really interesting. So look at the way that it came out here. Let me zoom in a little bit. Okay. So for most of the session, we just were writing the cost basis. Then we went to the stop out line, immediately bounced. And now we're crossing that line again. So is it going to bounce again? Well, it's already gone through it, but sometimes you come to this line and you bounce. Sometimes you go to this line and actually we're going to have an uptrend. Hard for me to tell. I don't feel like that the news that we got was super significant or anything. It's not super significant, so I don't know why that would necessarily on its own shift us to all buy. I guess more broadly, I'm still kind of the opinion that this should be a relatively range-bound day. So I expect that we should stay between here. I don't know if we will really be able to get too high above that. So it's a question of, does it range here or does it range here? Right? Oh, what's the key difference in your new sum delta? You mean the cumulative delta indicator? Or market order? Well, so yes. Okay. So let me just kind of, there's 3 indicators here. Okay. That we're talking about. One is cumulative delta, and whoops. Let's switch back over to this screen. Okay. I have 3 indicators here that you might be talking about. One is just the cumulative delta, and my cumulative delta, my regular cumulative delta, is basically the same as the cumulative delta that you get with the NinjaTrader, or that you've downloaded custom versions of it, but it does caching. So you can like save and, see what the cumulative delta value was several years ago if you save all of the data that far back. Okay. Because one of the issues with like tick replay, so when you're looking at cumulative delta, you have to have tick replay on to reconstruct historical bars, right? And the difference between what it was live and what you're getting on tick replay can be like as much as 20%. Okay, so especially if you're looking for something where it's like cumulative delta makes a new high or a new low or something like that, that can very much change which bars you're going to get signals on and things like that. So caching it for backtesting purposes is actually very valuable. So that's all that's about. Okay. The second one is resting order, market order imbalance. So market order imbalance is in there right now. I have some changes to it for it to cache. But basically it's just a rolling window that tells you, are there more buy or more sell market orders in within the look back period. So it's kind of it's basically a way of turning cumulative delta into an oscillator. Okay. Really good for signals, because I want to say, like, if 60% buying, then I want to buy, or whatever. Okay. And then the last one is the advanced cumulative delta. So the advanced cumulative delta is set up to deal with some edge cases that will happen when trying to categorize whether an order is a market buy or a market sell. So in the treasuries, it's pretty simple to know whether an order is a market buy or a market sell, because I know what the best bid is and what the best offer is, and it doesn't change very much, and there's not a spread between them or anything. And so I just look at, if it's at or above the offer, then it's a buy, and if it's at or below the bid, then it's a sell, and it's simple, right? But what about a market where there's a big spread between the two, and you see volume go on in between the two of them? Then was that a buy or a sell? Well, there's a bunch of complexity about how you do that. Part of it is, so if this is my bid and this is my offer, okay, and here's the midpoint, and there's no liquidity in this whole area, there's no liquidity, right? So if I see volume over here, it's likely that was a market buy going into a sell, and vice versa down here. But then, so that's one part. But then another part is, if I see volume go off here, eventually I should see in my market depth updates that volume show up and then disappear. Right. So if I can match up the market volume with an accompanying decrease in the liquidity at that same level, then I can know for sure that it was, actually a market buy or whatever the deal is, right? So there's a lot, and there's a lot to it. It's a really complicated indicator, but for most futures, it doesn't matter. For most futures, your cumulative delta that you got is fine, especially when you're looking at it live. Okay, but if you want to look at stocks, if you want to use NASDAQ total view with DX feed, and you want to look at cumulative delta on a stock, then you would want to use my advanced cumulative delta. Okay, so that's the difference. Still kind of hanging out at 21. Was it 20? No, there could have gotten 22. I was gonna say 21.5 was maybe where we could have shorted it. But see, I'm not seeing any kind of really strong flow coming into the treasury. So if I was short, I don't think I'd be looking for like a new low or anything like that. Thanks. Cumulative delta would be great for Ethereum does the FDAX have a large spread? But you're right, for like ETH futures, because there's a big spread over there, isn't there? You'd want to have a spread larger than 2 ticks. You have a spread larger than 2 ticks, then the advanced cumulative delta is valuable to you. I thought the FDAX was the bund. Isn't that like high liquidity and only 1 tick spread? Sometimes not. Zero Hedge says Miami investors secretly trying to buy Russia's Nord Stream 2 pipeline. Well, I guess it's not a secret anymore. Let's read about the PMIs. Zero Hedge says Trump hopes sends services PMI soaring to 32-month high. Following this morning's hoop show in Europe, U.S. preliminary PMIs for November were expected to inch higher, and they did on a month-over-month basis. Under the hood, U.S. flash manufacturing output is 46.3, a 23-month low. Commenting on the flash PMI data, Chris Williamson, chief business economist at S&P Global Market Intelligence, said the business mood has brightened in November with confidence about the year ahead hitting a 2.5-year high. The prospect of lower interest rates and a more pro-business approach to the incoming administration has fueled greater optimism, in turn, helping drive output and order book inflows higher in November. Oh wow, they came all the way to 18.5. So should it be 18 or 18.5? Let's see. Looks like he's gonna get 18. I didn't know about that one, Octavius. Like for your VWAP, that's probably fine, but like trying to judge what we should do with the inventory cost basis and everything, it kind of looks like it was a bounce, but usually it bounces hard off the line, and this time it didn't. So I don't know if we count that one or not. The rise in the headline flash PMI indicates that economic growth is accelerating in the fourth quarter, while at the same time inflationary pressures are cooling. The survey's price gauge covering goods and services signaled only a marginal increase in prices in November, pointing to consumer inflation running well below the Fed's 2% target. The concern is that growth remains heavily reliant on the services economy, with manufacturing production declining at an increased rate. However, the promise of greater protectionism and tariffs has helped lift confidence in the U.S. good-producing sector, which is already feeding through to higher factory employment. Factories are meanwhile stepping up their purchases of imported inputs as they seek to front-run tariffs, putting pressure on supply chains to a degree not seen for over 2 years. Any further stretching of these supply chain lines could see prices move higher as demand outstrips supply. Not exactly the rate-cutting weather out there today. Optimism soaring on Trump, but prices about to also soar on Trump. Okay, Octavius did take it +5. And I'm assuming you took it off there because of level value area low, right? But still, I was going to say I don't know if we should read that as a win for the inventory cost basis. Because it went through it. How do you manage to allocate every executed order in the latter two data? Are you talking about in the advanced cumulative delta? So not always. Not always. So most of the time you can find a corresponding order. Like, so when you see market volume come in a certain size, and you can find a corresponding change in level 2 for it most of the time. But something like 10% of the time they don't match up, and usually that's when you decide if it's closer to the offers than it's than it was a buy and whatnot. So the case where we really are just not sure whether it was a market buy or a market sell, it's very, very small, but there is a percent of them that you can't categorize. Now, if you have market by order data, then you could really calculate that stuff for certain, but it's kind of like that 1% difference really matter. I don't know. I kind of feel like for what you'd want to do with cumulative delta in a stock, it doesn't matter, right? The data, it's interesting, man. Like you would think, oh, okay, like you to do back testing and machine learning and stuff, you need to have quality data. And you're like, well, okay, that's like not too hard. You just need data, right? But actually, like, having data that's accurate and clean and in the format that you need is actually a really hard thing. That's what I'm giving you with these indicators. Is I'm giving you information, or I'm giving you indicators that output the data clean for you, so that you really have good, clean data. Now, of course, to have complete data, you'd have to have it open all the time, but maybe you only want your algorithms to trade during certain times anyways, right? But then it's all up to you. That's super valuable. That's actually super valuable, what I'm giving you. You need to understand, most people never complete this part. And we've basically gotten it there. So it took us a couple of years, but we got there. Okay, there's another story I think I want to read here. Trumpflation risks likely overstated from Zero Hedge. I might put that in there. Fred says agree, yeah. Recession risks roar back to life in Europe after weak PMIs. Are retail investors behind the Bitcoin price surge? I don't think that they are. I'm not going to read that one. They're trying to make me care about Bitcoin and I'm resisting super, super hard. Okay. So I just want to note that it kind of looks like that on that last leg down that the 30-year came back pretty hard. And I'm wondering if there's not a steepener, the beginning of a steepener coming through. Let's keep an eye on that. What? Millennials choosing to be double income, no kids, could push GDP down by as much as 4%? Wow, really? I might have to read that later. That sounds crazy. Okay, let's start with Trumpflation risks likely overstated by Lance Roberts via realinvestmentadvice.com. With the election of President Donald Trump, the worries about tariffs and pro-business policies sparked concerns of Trumpflation. Inflation has been a top concern for policymakers, businesses, and everyday consumers, especially following the sharp price increases experienced over the past few years. However, growing evidence shows inflationary pressures continue to ease significantly, paving the way for lower interest rates. The question is whether policies being considered by the next presidential administration will lead to Trumpflation or not. Current thinking, many mainstream economists and analysts believe President Trump's economic policies could trigger Trumpflation. The term refers to potential inflation driven by his administration's fiscal and trade policies. Analysis suggests that extending the TCJA tax cuts, I don't know what TCJA stands for, but basically these tax cuts that they made in Trump's term and are set to expire next year. Further tax cuts and infrastructure spending or increased military budgets will boost economic growth and lift inflation. This belief is that this fiscal stimulus, especially during an already low unemployment environment, would increase demand, leading to price increases. Furthermore, Trumpflation could be triggered by introducing trade protectionism and tariffs. Economists argue that restricting imports and raising tariffs on foreign goods will lead to higher domestic prices, as the costs of imported goods would rise. Combined, these policies pointed to risks of higher consumer prices and potentially higher interest rates. The advantage that we have today is that we can review President Trump's first term to see if the same policies instituted then led to higher interest rates and inflation. Following this election in 2016, he instituted tariffs on China, cut taxes, and passed regulations that preceded less immigration and increased business investment. The chart below shows his first term's economic growth, inflation, and interest rates. Blah, 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 blah. I don't know if the comparison to his first term is necessarily completely accurate, because one, you're talking about different policies, potentially, talking about a different degree of policies, and I think that the environment is different too. Like, at the beginning of Trump's term, we had been going through a period of chronic deflation, like where the Federal Reserve had to keep interest rates ridiculously low for a really, really long time in order to prevent deflation. And so, that might have helped Donald Trump to be able to do some of these things without triggering inflation, because basically what it meant was we bring inflation back to target without the Fed having to do anything. Okay. They say what is crucial to note is that while his policies led to more robust nominal economic growth, inflation and interest rates remained range-bound to roughly 2%. That is, until the pandemic arrived, which led to a collapse in both rates and inflation. While many predict surging inflation resulting from President Trump's plans for tariffs and increased deficit spending, an historical review for perspective is invaluable. Let's start with tariffs. As noted above, Trump instituted tariffs in 2016 without an impact on inflation. However, a 2015 paper by the Tax Foundation gives us additional perspective. Let's travel back 100 years to 1915. Back then, the main sources of federal revenue were very different. Almost half of all federal revenue came from excise taxes, such as taxes on liquor and tobacco. Another 30.1% came from customs duties or tariffs. In other words, 80% of all tax revenue came from excise taxes and tariffs, while individual and corporate taxes were about 6% each. That lasted until Congress passed the Revenue Act in 1942, which reduced tariffs and increased personal and corporate income taxes. Given economists' current concern that Trumpflation is returning, the historical evidence of previous tariff usage does not corroborate those concerns. A chart shows the federal funds rate equivalent, the 10-year Treasury rate, and the annual change in inflation from 1915 to 1945. The current economic environment is very different from the early 20th century we will address momentarily. However, today globalization and technology gives consumers vast choices in the products they buy, while instituting a tariff on a set of products from China may indeed raise prices of those specific products. Consumers have easy choices for substitution. I'm not liking their analysis so far. Like trying to base it off of the past history and saying, well, it didn't cause inflation before, so why will it cause inflation now, is like a really dumb, is like a really brain dead analysis. Kind of like a lazy analysis. Like that's like somebody that's not really in the economics, right? Like a real report would say, okay, here are the specific policies that we're thinking about, and here's like the net effect that they could actually have. So like, and one of the problems I have seen analysis like that, but then they have other problems like, well, we're going to institute, what will tariffs be? Well, if we institute 10% tariffs across the board on China, here's the effect. Well, okay, but they're not going to institute 10% across the board tariffs. I think that's extremely unlikely to happen. So, you know. Oh, wow, this is super, super long. Headwinds. Normalization of supply chains, stabilizing energy prices, evolving consumer spending habits, and the backdrop of slowing economic growth all point towards continued downward pressure on inflation. Moreover, historical evidence shows that high debt and deficits are more likely to contribute to deflation than inflation. As President Trump embarks on his second term, these factors play a crucial role in shaping the economic outlook, likely mitigating the risk of runaway inflation and easing concerns about higher interest rates. So, my opinion at this time, and I would like to see more data, but my opinion is that there is maybe a small risk to inflation. But some people are acting like this is going to be runaway inflation with Donald Trump and all these sorts. I don't think so. My guess is that if there is inflation, that it's kind of going to be a footnote sort of a thing that most people don't even note or talk about. Founded rationality, like the analysis that most people are doing is too simple. But this is a case where going the extra mile and really figuring it out would be valuable. Okay. Let's read this one. Deciding whether or not to have children is a deeply personal choice for any individual, but an increasing resistance to becoming a parent now presents challenges to society as a whole. The crude birth rate in the U.S. has dropped by more than half since the 1960s. Per the St. Louis Fed, 60 years ago, approximately 24 babies were born per 1,000 people. In 2022, that figure stood at 11. This drop, combined with the fact that the nation's population is living longer, is a serious concern for economists who question how economies will function with fewer people available to do the work. Oh, I can explain it. Those people that are doing the work become way more productive. Okay. Because they have AI and all these other things. Okay, Melinda Mills is a professor of demography and population health at Oxford University's Nuffield Department of Population Health. Mills explains sustained low fertility combined with longer life expectancy results in aging populations. This causes strains in the labor market, such as healthcare for older populations, the closing of schools, rethinking housing and infrastructure, and rethinking pension systems and age of retirement. The resulting drop in GDP from this aging population would be as much as 4%, James Pomeroy, HSBC's global economist, previously told Business Insider. Previously, experts believed that economies would see a post-COVID baby bump spurred by a brief uptick in births in 2021, but data from 2022 and 2023 made it clear births were reverting back to their pre-pandemic trend, with couples increasingly choosing a dual-income, no-kids lifestyle, as the CDC reported last year that U.S. fertility rate fell to a historical low of about 55 births per 1,000 females aged 15 to 44. In a low fertility scenario, the number of people of the traditional working age could start falling within 20 years. Pomeroy wrote in his latest note on the subject, though Mills warned the tension between fewer births and older population is already being felt. She explained many countries are already struggling to fill healthcare positions which previously had relied on migrant workers to fill. This happened in the UK, for instance, where in 2022, around 33% of migrants were to work in the healthcare system. This has also caused political tensions, with countries increasingly facing choices related to sustaining the labor force and pension systems while also thinking about reskilling or urging existing inactive populations into the labor market. You'll find it more difficult to find somebody to cut your hair, do your nails, set up the x-ray machines at the hospital. The sheer decrease in the number of people becomes a problem. How many lots have you ever seen someone trade a goat? Well, I mean, I've seen market orders of 10K contracts before. I think we saw 20K one time. And we were like, whoa. I can't even remember when that was. It wasn't like anything major happening. But we're coming right back up to that level. So here's the question. Can we take the VWAP bounce again? I don't know. Like, normally you can only catch that so many times. I wonder. S&P 500 is falling here. Might be driving the treasuries. And I'm also possibly seeing a shift in the resting orders. So it may actually have changed now. Octavia says no. Like big capital letters no. I don't think that taking a short here makes sense. You know, all other things being equal, it would maybe be worth it to go for the long to see if they you know, make a further push. But it being a Friday and the time of day and everything else suggests that it's probably just going to give you grief. So I probably wouldn't take a trade. Oh, that came back really quickly. What's with that? Maybe they're listening to me talking. They just want me to look bad. Okay, what's the motivation to have children? Young people have plenty of reasons not to want kids right now. Expensive childcare, an unaffordable housing market, high costs of groceries and household essentials, career disruption, and concerns for the future of the planet. A Pew Research study from July of this year spoke to more than 3,000 people who either haven't had children or don't plan to. Of those aged between 18 and 49 who fall predominantly into the Gen Z and millennial generations who said they didn't plan on having children, the top reason is simply that they didn't want to or wanted to focus on other things. Additionally, 38% said they didn't want to have children because they were concerned about the state of the world, and 36% said they couldn't afford to raise a child. Further, 26% said they didn't want to have children because of environmental concerns, and 24% said they wouldn't have children because they hadn't found the right partner. Only 24%, huh? Because all of those other reasons are bullshit reasons, to be honest with you. Like, you will find a way with the money, and there aren't environmental concerns with it. In fact, there's more environmental concerns with us not having enough people to support things. The technology will continue to improve. Maybe they will make a new low. Hey, I guess I was wrong there. Oh, it's really interesting. Is that because the S&P is already bouncing? Well, the dollar is moving. I don't know. That one's so tough. We'll zoom that in here. It seems like something happened there in the treasury that was a little unusual. course, my opinion is still it's too late on a Friday to be messing with it, but it's still interesting. Let's keep an eye. One factor impacting birth rates is also women's increasing power and influence within the economy. Mills explains the main reasons are manifold, including shifts such as women obtaining higher education and remaining in the labor market, work-family reconciliation, but also housing problems, gender equality, and uncertainty for the future. Age at first birth is above 30 in many countries for women. Really? That's crazy. And even higher for men at 32 and older. This also causes increasing biological limits of fertility, yeah, because then you only have like 10 years. Another consideration for many dink couples is the freedom they can enjoy in their careers if they don't have the pressure of children to provide for. Tell you what, if I didn't have children to provide for, I would be able to spend so much effing time on, working on the business here. But most days I'm just watching kids. I never thought I'd quit my job and try and write a book. It was never something I saw as an option, but then I took time to think about what I really wanted to do, and I could do anything, and it took a lot of convincing and months of assurances that I could take the time and afforded it, and decided to do it. See, and that's what I want to do. Azure, you just need to be, more calm and not being destroying the house all the time so that I can focus on other things. Yesterday, okay, so you know what, yesterday, he wanted to play the Nintendo Switch. He's gotten into that mode again. So he's been playing like this game that's like Minecraft, but Legos, called Lego Worlds, I think. And I don't really understand how the game works because I haven't played it. It seems to me that in this Lego Worlds game that he's got like a creative, it's kind of like a creative sandbox. So you can come in and you can just use any Lego piece, and there's like Lego piece blueprints. So like, how is it different from Minecraft? In Minecraft, if you want to build a house, you have to know how to build the house. But in this one, there is a plan that will just build the house for you with all the individual pieces in it, right? Another thing is that the NPCs, the non-player characters, will go around and build stuff on their own, right? In Minecraft, the villagers, they walk around, they do stuff, you can talk to them, but they don't build things, they don't change the world. In this Lego game, they change the world. Like if you just start a regular world, these NPCs will pop out of nowhere and they'll start like building a city. It's really crazy, actually. So he's playing this game, and like 2 days ago, I couldn't seem to get to teach him like how to use a D-pad on a controller. And they come, so they're right at 16. Keep note that they're at 16, and then there's that 15 just below it. I don't know if this is really a good situation for a momentum trigger, but we'll see. Anyways, so a few days ago, he couldn't control characters. Like I had a hard time trying to tell him this does this and this does this. But after a day or two on this game, like he totally understands it now, and he can walk around the environment and do whatever he wants. And he knows how to change the way that the character looks. And the character that he selects is like absolute nightmare, dude. That's like a scary glowing face and like a black suit. And then he had found like a horse of the apocalypse. So he's this 4-year-old nonverbal level 2 autistic kid running around in Lego Worlds like one of the 4 horsemen of the apocalypse, destroying all of the buildings and everything that the NPCs are making. He's an absolute menace. Should I be concerned? I don't know. Like, my current plan is to just let him keep playing it. I don't know. Should I be concerned? But then the other thing is he just would not stop jumping. Like, as he plays, he jumps. And I don't want him to do it on my couch. And I don't want him to do it next to me, because even if it's on the floor, like, it makes the whole room shake, right? So we brought the trampoline up. So now he plays the game and he bounces on the trampoline. And then I'm there on the laptop trying to program on the laptop and or submit resumes. Ugh. So I get it. Kids are hard. But they're worth it. And it's crazy to me that there's so many people that are like, nah, I'm not going to do that. Okay. Oh, there goes society. All right. Oh. 4% though, that's crazy. He could get a job with Antifa. And I don't think that's that they pay money. I mean, if he can get a job that actually pays money, I'd say it's more common and normal to immediately go for the creepy thing. The creepy things are usually what are different and individual to an unrealistic color for such. Okay. So maybe it's just the novelty of it that attracts him to it. Maybe. The 5-year pushed a little bit lower there. The 10-year is not. I'm a little surprised. Isn't that so interesting? Like, dude, I was so wrong about that, wasn't I? I don't think I've been that wrong about something in a while. So, to review how wrong I was, it came up to our cost basis line. Usually it bounces. And I said, is it really going to bounce here again? And I think Octavius said no. But I was kind of like, well, I mean, maybe they might go up to here and they could play around in this range. But like the hard bounce and then push to the lows and continuing through and everything seemed unlikely to me. But within 2 bars, it was down there. So not only was I dead wrong, but I was wrong quickly. But I was also kind of right because I said I wouldn't trade it on a Friday. So we didn't take a trade. Do I get to count that as a win? I don't know. I just want you to think that I said something useful so that you'll buy my indicator package or something. Now, probably what I should just do is I should just take a trade, right? Looking at this resting orders filtered, it's still not doing what I remember it doing when I messed with this last time. I wonder, so I'm going to add the filter onto this one, and I'm going to say 10. The inside 10 prices. Ignore stuff that's like way crazy out there. I really want to get these indicators all in a really good spot and all caching and everything for January. And then January is where I can say like the data is really clean from then on. And then after that, I feel like that if I want to do development work, then I need to do it in a different, like in a sandbox of some sort. Maybe I can make a Windows node in my Kubernetes cluster that runs it, and that can be where I save the data. I don't know how I want to do that. I think that to do that, I would need to have a professional license and like multiple data connections, though. Because like right there, now that I've changed it, the amount is much smaller. So it's less levels. All right, so where are we at? Got 15 minutes. Oh, about 20 minutes left, actually. Haven't had any kids come down. I'm gonna go and wake them up. We may well get some bond buyers until the EU closes. ECB Snobbles is speaking. Schnabel. Every time that I see that name, I just think about the Pokemon. Schnabel. You know what I'm talking about? It's spelled SNUBBULL, but like that's whenever I hear that ECB Schnabel is speaking, this is what I picture in my mind. Even though the guy and all these things. Anyways, oh man. That reminds me of the old days when we played Pokemon Go. You know, before Niantic like destroyed it with the microtransactions. And it just so many good good games destroyed by microtransactions over the years, huh? A kid ran off with my preferred fidget toy. I don't know. I still think that they could touch 16, but I'm really skeptical about extension below that. But, you know, the last time that this sort of a situation happened, it was like they stopped through it and like people really, you know. So I wouldn't put it past it for, you know, it would be really, it's a less likely thing to happen on a Friday, but you never know. I don't think that this is working correctly. Obviously, this one's not quite ready for release. Oh, maybe it is working correctly and it's just small. I don't know. Well, I'm going to clear the cache on that one, though. There you are. Better. Let's try that. Okay. It is doing something, so we'll see how it goes. Divya says, my girlfriend has Bitcoin for years. I'm never going to hear the end of it. How much? How much is it now that it's 100,000? Like, so like if she's like doubled or quadrupled her money with it, I could understand them like bragging, but I'd kind of be like, no big deal. But like if she became like a millionaire from it, then it's kind of like, oh, she's done it, right? So I could have, you know, I had like when Bitcoin was like 1,000. No, not 1,000. It's more like when it was at 10,000, right? It's more like when it was at 10,000. We could have put 1,000 into it. So like that could be worth $10,000 now. Not life changing. Of course, I knew about Bitcoin from the very, very beginning, and I just hated it the whole time. So I guess I should have invested some. Well, the problem was back then I was like, well, I don't know. Like, when should you buy it? Like, I don't know what's now. I know so much more about the markets that I could say, you know what? Even though I don't like it, I could probably make a ton of money from it. And here's how I could go about doing it, right? I think that if I had, for some reason, decided to get big into Bitcoin from the very, very beginning, any of the money that I would have put into it, I probably would have lost through the countless market crashes and exchange problems and all that sort of stuff, right? And Stefa, good morning. Is there potential to make your own software company for charting stuff? You're the third person to talk about this sort of a thing today. And Stefa, what's with that? I would really like to start my own futures trading platform. Well, I think it wouldn't just be futures trading. I think that it would be for stocks as well. I would like to start my own platform. And I would like it, it would be a desktop platform, not a web platform. I would need funding. You just joined, yeah. Know what to tell you. It was like right at the very beginning, somebody was saying, hey, what if you made a platform that competed with TradingView, but it was cheaper or something like that? And I was like, well, like if I make it like trying to compete with TradingView but it's just cheaper, where would my margin come from? How would I make money from that? It doesn't necessarily make sense. So it's kind of a rough thing because the thing that I said earlier was, okay, well, to go into an existing market, I need to be orders of magnitude, so at least 10 times better than the other options that are available. And I'm kind of like, well, there's not really a platform that's like really geared towards order flow for stocks. So if I had a platform that had order flow, worked with stocks, and it had all of my other analytical stuff, so the data caching and the data management, and you could do it in Python, I think that would be 10 times better. I think that would be 10 times better than anything else on the market. Okay, so I think I have a case to be made that we could do it, or that it's worth trying to provide the product. So then what are the economics of it? Well, I think that to develop this, that I would probably need at least $1 million. I think that I would need funding of $1 million or $2 million. That would be for like, a number of developers to pump this platform out in a year or 2 years, right? And then we could charge people $500 for it, maybe. That's what Jigsaw is. This platform might maybe be worth more than that. Let's say like NinjaTrader can be up to 1,000, right? Well, if I was 1,000, if it was 1,000, then we would have to have 1,000 people buy it to pay for the funding. Could we get 1,000 people to buy our platform? I mean, I think so. How many copies of NinjaTrader do you think that they sell per year? Probably a couple thousand, right? So like, I think it could work. I don't think it would be like an easy thing, but I would have to find somebody to fund it. You've never seen a copy of NinjaTrader? You see it every day on the screen. What are you talking about? having a conversation in Discord about NATO. I'm almost tempted to bring it in here because I know that that's something that kind of tends to animate you guys, but... Oh, so I missed this comment and stuff. I'm just asking because I did my own platform for a study project in Qt Creator with a free stock API. There you go. Like, I think some of the basics it could totally do, right? Like, I kind of think that I would like to do it in Rust. We could use the same framework that we were using to do the timer thing. And, you know, it would just be start with a chart. Just have a CSV file with the open, high, low, close values, and then have that make a chart. There's your first bit. Okay, now let's make it connect to data. Okay, then let's work on workspace management bits. Everything, I don't know, I think I want to do it in Rust. But, you know, whether it was in C++, C, Rust, or Zig, oh, it probably doesn't matter huge. What drawing framework you use at the beginning, that would matter. But I think that the thing that would, that's what the deciding factor on that is like, what do I want to be as a company, right? Like if I go to Rust, I have to pay more for developers. You have to get more experienced developers because there's not a lot of people that really truly understand that stuff and are really good at it, right? Different from if you got a C++ guy and all that. You know, like if I wrote it in C#, it'd be easy. It'd be a lot easier. But there's some things that I would like to do in Rust with dealing with memory management and all of that matters, right? I heard Rust is the hardest language. Sure, we call it the hardest. There's a lot of things that you have to do in Rust that you don't have to do in other languages. But it's memory safe, though. That's the thing, is you don't get memory leaks and it's hard to hack. So there's advantages to it in that way. I really like, if I'm looking for a new tool like a text editor or whatever the deal is, I always go and look for what people have written in Rust because those tend to be the best ones. Okay, but there's some problems with Rust and GUI development. So you're really, it's more about the GUI development. So Rust might be a poor choice from that perspective. But the thing that matters on the language front is what the end user would interact with. And I want the end user to interact with Python. So Python libraries that have bindings to our Rust API or whatever. And so you can do all of your indicators and all of your stuff in Python. Even though the thing that's actually drawing and managing the workspace is Rust. So, I don't know, is this really that good of an idea? Where do we go and find the money for this? Maybe I need to research that more seriously. I don't even know if I actually need $1 million. So like I think I would want developers that are up to $200,000 a year. Like I want good developers, right? If you had $2 million, you could pay 5 developers 2 years for 2 years. Definitely do it. So you probably don't even need as much as that. And if you had 2 million, maybe what you could do is you could start with 2 or 3, and then the extra would be to give you time and for marketing. Create a crypto. Let's see here. How to get How to get a $2 million loan for starting a new business. Banks and credit unions. These institutions may have lower rates, but strict eligibility requirements. To qualify, you may need to have been in business for at least 2 years, have a FICO score of 720 or higher, and generate $250,000 in annual revenue. SBA loans. These loans are partially guaranteed by the U.S. Small Business Administration and are issued by participating lenders. They may have flexible terms and low interest rates, but they have tight lending standards. Consider a cosigner with good credit. I probably need to find a business partner. That's one thing. I will send you an application as ChatGPT. That's a good idea. Creating indicators like C# with Ninja, but with Python. Exactly. So do I have? Where's the thing? Because I think we added some things in here. Platform. Here we go. So I say written in Rust to be performant but memory safe. Allow indicators and strategies to be written in Python. Statistical tools built in. Spreads built in. Cross-instrument trading, that's, that for a while that was a big deal, but most of the platforms I think have that now. Order flow for stocks, so it would be focused on everything that we'd want it to work with stocks too. We'd want it to work with MBO data, and it has the caching built into it. Okay, caching, data management. What is MBO data? So that's market by order data. There are some things that you can do with market by order data, like potentially tell when a market order was triggered by a stop. Yeah, so it's just a different type of market depth. It's allows you to do a more accurate analysis. So like some of these things we were talking about earlier that before you were here, Ansteffa, there are some situations where if there's a large spread and everything, it can be difficult to tell whether a particular market order was a market buy or a market sell. But with MBO data, you can tell conclusively. With MBO data, you can also tell conclusively exactly where you are in the line, because it will tell you which orders canceled, so you'll know if the orders that canceled were in front of you or behind you in the line. And then the stop thing is, it will say, okay, here's a new order that got added to 19.5. Okay, now there's an update to 19.5. Okay, there's a new order, market order into 19.5. Okay, but what if you get an update order, market order into 19.5? Why would a market order be an update? Because market orders are all just like new orders just submitted, right? Because it was a stop. Because it was triggered by a stop. The stop got updated into a market order. And that's how you know. Right, so that's one of the things that MBO allows you to do. I think you also need some broker connections like Ninja. Yes, you're totally right. So I think that we would want, well, I would love to try and work with Edge Clear, right? Ninja kind of has their own FCM. But the bigger one would be, we'd want to be able to do it with stocks. Now, even DX Feed doesn't allow you submitting orders, so. But I think that's one of the people that I would want to partner with first is DX. I'd be like, DX Feed, okay, we're gonna have a platform that's built from the ground up with the intention of being able to use DX Feed. And then we want to be able to connect you to the broker to submit the orders. Interactive brokers, yeah, if I could get them to do it, sure. But probably we need a platform first, right? So let's put on here, new line, funding. Let's look up SBA loans. Let's look up angel investors. And I know this is kind of the same thing, but what do we call these? What is that incubator? Startup incubator. I watched a comparison with DXFeed to CQG and Rhythm. I think that when we had it, we pulled it up on futures and compared them, and my maybe not. I don't know. Honestly, the difference that you can get with data between like CQG, Rhythmic, and whatever isn't going to be like huge. Wouldn't surprise me that DXFeed was not quite as good as Rhythmic. But again, the reason that we want to do it with DXFeed is for the stocks, to get it on stocks. Footprint compare? Well, I don't know. Anyways, venture funds. This is what we want. Venture funds. Y Combinator. And we'd have to spend a lot on advertising. Like, I think we could get something up and running within 6 months and then advertise it hard. Then the other question would be 500 or 1,000. So it's, I could do the model like Jigsaw does, like, right? $500 to start and then $50 a month. But or you can do the Ninja Trader one where it's basically just $1,000 up front. I kind of think that the just $1,000 up front would make more sense because especially if you're going for people that want to do stocks. I think that the people that trade stocks are unlikely to pay a monthly fee for their platform. They're gonna have to pay a monthly fee for the data, so it's like, so maybe going for 1,000 a pop. Crowdfunding. Well, how would I do that though? I don't think that crowdfunding would work because so again, if I say, okay, we create a crowd fund, or what is the name of the website? I forget. Anyways, and then we say, okay, $1,000 to get the platform, because that's what we want to charge for it. And then we would have to get 1,000 people to back it for that, right? I don't think that I have the marketing muscle to get 1,000 people to spend $1,000 over, an X month period before even building it, right? Plus, we had a little vote about this, and we were like, we want to YOLO in equities, and I've done a little bit of YOLOing on equities. But if I'm honest, I really want to make my own trading platform. There's things that this other software doesn't do that I want. It's just my mind's going and going and going. Could I join Y Combinator? How's that work? You know what? It's time for me to get going. Yeah, GG. Worth 7. How much do you give them? That works. I'm gonna go on YouTube and I'm gonna search Y Combinator and I'm gonna look at it. We're gonna take a look at, actually, before we go, SBA loans. Fund or grow your small business. 7A loans. 7A's primary business loan program provides loan guarantees to lenders that allow them to provide financial help for small businesses with special requirements. Can be used for acquiring or improving real estate, short and long-term working capital, refinancing current business debt, purchasing and installation of machinery and equipment, purchasing furniture, fixtures, and supplies, changes of ownership, multiple-purpose loans. Maybe we can find some people locally too. Ask them. Written, yeah, I am. To be eligible, be an operating business, operate for profit, be located in USA, be small under the SBA size requirements. So I don't know the exact bits, but that's probably okay. Must not be an ineligible type of business. Nonprofits, financial businesses, engaged in lending, passive businesses, life insurance, businesses located in foreign country, pyramid sale, businesses driving more than 1/3 of annual revenue from legal gambling, any illegal activity, private clubs and businesses which limit the number of memberships, government-owned entities, loan packagers, businesses primarily engaged in political or lobbying, or speculative businesses, such as wildcatting. What is that? Oil and gas drilling, an SEC practice, unregulated taxes, financial risk taking. I mean, you could bootstrap a portion of it. Like we could start looking at that next week. I want to finish up with these indicators, but I think we're getting in a pretty good spot here. Anyways, some weird stuff happening over here. What's with those big bar right there? That's different. I don't know what that's about. Let's come over here and change the market. Like 24. No, not that. I don't know. That's kind of weird. Well, anyways, came back right back up again, which is like, wow. So it did it what? 1, 2, 3 times. 3 times. Wow. Okay, I'm gonna try to do some reading. You guys do some the teamwork, right? Remember, and then that was the other thing is remember we want to talk about the indicators. That's because we want to do the DX feed thing again. So look out, share it around. I will see you guys Monday. Stay excellent, team.